All right, Banks. So you have the floor.
All right, thank you very much. All right, so good evening, everybody. Good evening, guys. Good evening, Chrissy. Good evening, my brother, Mr. Wells. Let's see what we've got for the coming week. Again, uh, zone users enter the waiting room. Okay, let me admit those. Can you turn off the security so everybody can just enter without that waiting room access? Okay, I did that already.
Okay.
Back to Going back to the waiting room to admit.
How do I do that?
I did that already. I did it
Oh,
already.
okay. That's good. That's good. Nice.
All right, so let's see.
I hope,
Let's
I
see.
hope it's still recording, right?
Uh, yes. Record to the
Uh,
cloud on this computer. Is it recording on your end? I believe it's still recording here.
yeah, I'm sure.
Okay. All right then. So let's see the DXY. Let's see what we've got before we move down uh to these other babies. I then understand that there's something called expectational order flow, and then we'll be viewing everything that we'll consider on this call today as basic expectations based off what we want to see or what we have seen currently on price and what we expect to be seen in the coming days. So yeah, it's top-down analysis from the weekly time frame or probably the monthly time frame. Let's get a better view of what price is doing, and then we'll go a bit more deeper. Okay, so if you look at the monthly time frame, it's important that we understand what's happening on here based off structural narrative, first of all, before we begin to go into the tiny details. Okay, before we push into the tiny details, it's important that we understand what has happened here. So let's not do so much with what happened in 2007 and all of those things. Let's work with the immediate data right in front of us. Okay, it means we want to put this into play, right? Price came back for internal liquidity of these levels, or let's just call this a sweep on liquidity over here that bettered this break of structure to the upside. I will deal with what that is interacting with, but before that, let's just work with this. Okay, that's the information I would like to be working with on the monthly time frame. I would not want to go into what happened to the left, so we don't conflict what we are seeing here currently because it is the monthly time frame, right? We are considered with intraday moves because I'm an intraday trader or a day trader, right? We are considered with the intraday moves or the day trading moves that price could present based off what we had here. So the monthly time frame came into a particular fair value gap, and then we had a monthly breakout, right? Presenting internal liquidity or a monthly order block or whatever that is. Okay, price came back for that, stepped into this, and then bettered the break of structure. Okay, while we had the break of structure, we had some sort of flip zone narrative notched into price here, something I teach as the flip variance. Okay, price created something people would have viewed as a monthly area of supply or was aggressively taken out, right? So once this is taken out, we are looking at price to reject back to, oh, somebody's, Isaac, Mr. Isaac. Mr. Isaac, is there a problem? Oh, God.
I think you can disable annotations for other people, right? I'm sure.
Yeah, I think I
Yeah.
wrote annotation. How do they do all those disabling and all of those things?
Um,
Don't worry.
I
I think,
think using that.
yeah, let's just walk. I think we're good.
All right, good.
All right. So, price came into, like I was saying, and then we had this breakout, presented a monthly flip, and then cleared. So it means that we must first be willing to interact with the monthly hidden basis, right? We should first be willing to interact with the monthly hidden basis and see that this area probably fails before trying to create so much magic. So yes, on the monthly time frame, this is the first area of interest that we could see price working with the whole idea of the discount and premium pricing, right? Price is already heading into below 50% of discounted levels. So this is the first point we want to interact with because that is also paired with, if we go back
Max,
to the line chart. Yeah?
Max, can you
Yeah.
like raise your voice a little? I think a
Oh,
voice.
sorry. Let me increase my
All right, thank you.
audio setting. Sorry, guys. All right, fine. Am I better now?
Yes, sir.
All right, good. So So this is the first points of contact, the first points of interaction that we have on the monthly time frame. Okay, sitting inside of our discount level that is unmitigated. And then, yes, we use the wicks because we want to see this as a sweep of liquidity and then breakdown that qualifies this to be some sort of a flip zone. But then the line chart gives us the main details in what happened there. So yes, price is coming back for this as some sort of monthly breaker block. Okay, monthly breaker block or monthly, whatever other block is not seen to that point, because people do not see other block same way. Okay, I've heard lots of people teach other block technique as so many other things. So whatever you call that, there's an other block sitting right on this high. Okay, I will try not to use my personal terminologies because I'm talking to people who are not necessarily my students. Okay, so price is supposed to come and interact with this as the first point inside of the discount level, interacting with whatever is on this high, and then we look out for reactions here to bet some sort of reversals on the DXY. Okay, so let's push down from the monthly time frame and then see probably the weekly and then the daily, if there are any other details we could work with at the point. Okay, so if you can throw more light into that, it makes more sense to view it as this. This is a grab on liquidity, right? We had this here as a break of structure. If that was that, then it means we could view this as some area of supply, right? And then the law of flip states that the supply broken transfers power to the demand responsible for the failure. Supply failure or a failed supply transfers power to the demand responsible for the failure, right? So this young man sitting here responsible for the failure of this weekly supply level, right? Which is also a monthly level and all of that. And we have this push to the upside. So yes, we should be willing to interact with this area and then try to see some sort of reactions from this point, if that should hold, if that should hold. Okay, so push down to the daily time frame, because I know everybody's waiting for the corrections on that area. Let's see if we have any sort of inducement knots into the point. Let's see if we have any sort of inducement knots into the point. I just go back home and discover that my generator has refused to send current to the house. So I'll try not to stay too much time on mine so that the laptop does not go off on me. Okay, yeah, we have, this is not relative equal low because there's no such thing as relative equal low in the main sense. It is not an equal low, it's not an equal low. It's either liquidity was swept or price actually created equal lows. So if we look into that area, I think when we go down to the hourly time frame, let me just mark that. We'll see what actually happened there. If it makes sense to be used as inducements on the, let me make this color red. So when we go to the 4 time frame or so, there's no extra detail here apart from what the monthly time frame has shown us. Okay, so this is a very valid base we could interact with as flip zone. Okay, so if you could call this one and then see what happens from this point, probably short rejections if that will fail, but then the story, the narrative that is not into here will determine if we are willing to work off that levels or if we'll be seeing lower pricing. Okay, and let's see the 4 time frame, and then we'll push slowly down into our intraday time frames if need be, or probably stop at the 4-hour time frame. Thank you. Yeah, thank you. Okay, so let's proceed. So on the 4-hour time frame, we have a flip zone that is our first point of interception or interaction if we'll be looking to seeing bullish DXY. Okay, and then that flip zone is a monthly flip zone, a weekly flip zone, whatever you want to call it. I want to see the narrative knots into here if we could address this as some level of inducements. Okay, let's see what is knots into this pricing. Yeah, looks good, looks good. So we expect these lows to be cleared, irrespective of the narrative that was knots into this. We want to see price come below this and then clear this low. Right, clear this red area and then tap into this area. I would not want to mark out precision points that could serve as reversals, but let's look at this as a zone, right? And then see what price does with this area. Let's see what price does with this area. And then we should be able to make sense out of it in the coming days. Okay, I would like to mark that as a 4-hour zone and then let it stay at that so that we don't get carried away with over refinement. So if price pushes into the area and then we get a 4-hour breakout, a 4-hour rejection, okay, we look for a storyline that pairs with what makes sense. We look for a storyline that pairs with what makes sense, and then we try to make that work. Okay, so on the DXY, if you're looking forward to a reversal, that is the first area I'm expecting to see a reversal. If that area fails, then we'll work with the low, because if that area should fail, I believe price will give us a narrative that tells us that we are going to clear that area. So we are not interacting blindly from any of the points, regardless of our expectations. Understand that expectations are only expectations until they are fulfilled. Okay, an area of supply is only an area of supply until it supplies. An area of demand only becomes an area of demand after it demands. By demand, I mean actually it does what an area of supply or demand is supposed to do. Okay, so don't be in the school of thought that what's the best word? Don't try to be a magician. Don't try to be a superhero. So when you get to your levels, you want to see price react from. Wait for those reactions. So most times, smart money traders or whatever traders claim to trade like the banks, and then at the end of the day, want to trade ahead of the banks. I don't understand how that works. So whatever you trade, and then you trade like the banks, like you say, okay? Because for the fact of what it is, the banks do not do this thing that we are actually doing at the time. But then, since it makes us feel good, we like to say we trade like the banks, okay? So if we trade like the banks, we should let the banks move, and then we follow suit. Don't try to move before the banks. Okay, so yes, that's the first point I'm willing to work with. And then if that area gets filled, it means that these lows will get induced. If this point gets filled at the flip zone, the lows should get induced, and then we'll see a new narrative that pushes us to the upside on DXY. I don't want to overcomplicate the story on DXY, so we can quickly jump into GU.